Hello everyone, welcome back to this part 3 of Summertime Sadness series of Euro USD. So we're on to week 3, part 3. First week was actually quite good. I actually remembered why I don't remember it. I was actually in Poland for the week. The second week when I got back, not a single trade was taken live. We did take one trade in the backtesting last week, however it was a loss and we sort of forced it and broke our rules a little bit. So as you know, it's better not to take any trades than to take a loss. So it's a good lesson to learn not to force something that's there, even if you've had a no trade week. What I'm going to do, I'm jumping into the third week to backtest here. What I'm going to do, I haven't deleted my other markup, so if you want to see my full top-down analysis, go to part 1. I'm going to run through just what I normally do when I mark up in a new week each week. I look at my structures, are they still valid, and then add what else is needed there. So we've got our daily uptrend. Got our daily points of interest here, some lower ones here that aren't relevant at the moment, but we've tapped into this one. We've come deeper this time, so potentially looking for strength out of here to go long. However, we've had a huge sweep of liquidity up here and we're pushing down, so I expect there could be pretty bearish out of here, but let's jump on the 4 hour and see how it goes. We still have a couple trades that we had set up that didn't get tagged in from last week, so we'll reassess those and see if we want to leave them there as well as we play along with this. Okay, so what do we have here? Push down with the 4 hour low. We had the 4 hour breaker structure. We then had a wick, and we've still got this current 4 hour low, and this would be our new 4 hour high after we've swept the highs and not closed above it. So let me just find that on here. Okay, we've also refined into this 4 hour point of interest here that we haven't quite tagged into, but we're playing off the daily point of interest there as well. So not too much else to see here. I guess we have had the sweep. Might delete a couple of these markups here just to clean it up a little bit. And yeah, we've had this internal chock here. So it's sort of a big sweep. The last low that led to the sweep has been broken with a body break. So that's our chock. And so we've got a couple 4 hour areas here. Can mark up. And this high one as well, obviously, the huge one that took the liquidity. At this point, these areas that we were looking for shorts out of, just like to mark them up, and then we'll jump on the 15. That's pretty much all on the 4 hour. We got a high, our low, and our points of interest. So pretty much just order blocks in here, and I'm not too worried about imbalance above the 4 hour order blocks, just because we're looking for reaction points out of them on the 15. So we're not entering here. So I don't mind if the 4 hour gets swept and then we get the chock. That's not a big deal for me. So let's jump on the 15, have a look at what we had left from last week. Okay, so let me just delete this one. I might delete them all for now, just clean up a little bit. This was the loss that we had that got swept. Nice area there. Got this area, but we've got a balance above. Got this area, but we've got a bit of a balance above. But this area as well that, by the time we get to this area, I'll look for a 15-minute chock down. Let's see what we have if we're moving down with structure here. Down, little mini breaker structure. Yeah, I guess this played out and then into the night time. So pretty much what I'm moving on, we're almost at 7 a.m. here. Trying to think, let's have a look. This is our 15-minute. Let me look at the 5 minutes quickly. I sometimes look there just to see if the imbalance is valid here. This high one I like a lot more. It's in the 4 hour. Swept a lot of liquidity. We got the highs swept 3 times and a lot of volume came out of there. And there's only a tiny bit of imbalance left over, so it's almost negligible. So I think if I was going to take a risk entry, so I didn't include the wick, it should be, I would take it out of this one here, and that's about it. So let's see how we play out from here. Let me have a look. Yeah, the thing is, this is sort of my chalk level. There's not really any really nice areas here because we are so close to our 4-hour low. I'm not really looking that much for longs. I definitely want to be focused. Unless we get something really nice, I'd rather be focused on shorts. So don't have any ideas here. Okay, so what we had here was a sweep, and I guess what you could say a minor chalk. Not really that interested in going long here, but if I was, it would be out of this point of interest here. But because it's such a minor chalk, I'd rather focus on just once we get into these shorts, and it would be look at this one. So let's pull it across. This one's just got too much imbalance above for me to want to take it from there. So I guess we'll see. It could hold, but I'd rather take this one and just cover the imbalance a bit. Let me just mark it up. It's also within a 4-hour point of interest, so it has a bit more weight to it. Okay, there we go. The 45. That would actually be realistically attacking the 4-hour low on here. So let's see what it gives us here in terms of long opportunities. Potentially. Nothing really showing itself right now. Look at that. And we've just broken through that low. Where did we reject from here? Okay, so that sometimes can happen. We rejected from this area here. For me, it wasn't high probability. We had imbalance above it there. I think it wasn't quite in the discount area. Yeah, on the equilibrium. That just happens, you know. We can't predict. We just go with the probabilities. So we keep moving down. Let's have a look. We've got a new breaker structure here. That wasn't like a missed trade or anything, a missed opportunity. It didn't fit our rules, so we're not going to take it. We'll have to reassess. I'll delete this one for now. Let me have a look. Now we've broken the 4-hour low. Okay, looks like it is a close. So let me just go and class this as a 4-hour break of structure. And we now have another area of interest. However, it is in the discount zone. I only marked them out now just in case price is super bearish and we get some bearish order flow on the 15-minute, just to be aware that there's a 4-hour point of interest there so I know what's going on. However, generally I'm looking at stuff inside the discount area. So let's jump back on the 15-minute and see what's there. Really tough push down. This is technically our 15-minute high now. In terms of points of interest, I guess the only one I'd really be interested in is this high. Took all this liquidity out. It's got some liquidity line below it. This I'm not really interested, didn't take any liquidity, it's got balance above, so really just the extreme. However, we have broken the 4-hour low, so once we moved into the 4-hour low, these would just be targeting the next 15-minute breaker structure. So let's see how price moves here. Very bearish, moving very impulsively down. We've now actually tapped into this 4-hour point of interest that we refined inside the daily before. If you want to see how we got that, I think it was in the first video. But yeah, it's just a 4-hour point of interest refined within the daily. So it's just a nice sort of area that we'll definitely be looking for potential longs here. Okay, so we have had what we would call as a minor chalk. However, it's mainly played out. So these minor chalks here are essentially just to show that a pullback started within the 15-minute leg. So what we have is this is the 15-minute leg. And so what I'm looking for when we have these chalk is if it can come back and tag into this extreme and then I can ride it up to here. But since our price is just pushing very impulsively into this discount area, I'm not really interested in taking longs because this is just indicating a pullback on this time frame. So I'm more interested in looking for shorts at this point. It's quite impulsive move up, but they're still valid. And I'm happy to take these. The only thing we do have to consider is now that the 4-hour low is broken, we could be on a 4-hour pullback, which would sort of be signified by this high being taken. That would be like a confirmed 15-minute chop for me. This is the 4-hour premium discount. And then we would look at potential shorts once we get 15-minute bearish chalk up here. So essentially we're looking for this area. It's moving very impulsively up, so it does create a little bit less probability for this to play out, but it is a valid short here. So you can sort of see, well, obviously we're into nighttime now, but you can see there's a bit of consolidation here. This is price reacting out this before we got the chalk here. So it'll be interesting to see what happens here, but we're into the night time, and so I'll play it through till our session. Okay, we're back in 7 AM. Price has pretty much just moved sideways here. Yeah, potentially there's something reacting out of here, but however, we're still looking for shorts in this case. We do have the extreme down here that hasn't been mitigated. However, for me, it's low probability as the pullback's already occurred. Potentially there could be a reaction out of here, but I'm going to just trade with the trend until it breaks. So I'll pull this across. Let's see what we get out of here. Push into the 4-hour area. You know, there's potential that once you're feeling confident, you could assume, okay, we want to push up into this area. Maybe we can play longs throughout the middle until we get to this area. However, as soon as price has broken into this discount area, all longs get much more low probability as, you know, we're looking for this, you know, to pull back into our area to then short from here. So I think I need to pause that, see what's playing out here. We had a big sweep of all this liquidity, which is actually pretty bullish. So might pause it there. Whoa, I think it was catching up behind. I don't think there was any opportunities anyway. So sorry about that, guys. I think it was just catching up. It was a little bit lagging behind the. This is a 7.6 anyway on here. So I would have been looking for the 45. Pretty good sniper entry. Looks like it rejected off part of these here. Fair enough. You know, potentially you could have considered them. I think I didn't consider it. Let me have a look, see if there was imbalance above, and maybe I've just made a missed error. There is 5 minutes imbalance above here, so I think it's a valid miss in my opinion here. Unfortunate, it did reject on this slightly lower order block. However, you know, due to the fact that this is the one that swung the high and there was still some 5-minute imbalance there, I was more inclined to take this one just in case we had the sweep, which didn't occur and it rejected from there. But, you know, I think it's safer to generally have it up there. But so unfortunately I missed that trade. Looks like it would have played out. What's playing out right now. In terms of other chances to get in, not really, because we had such this wick low. We're sort of waiting for some sort of resolution of this low, which unfortunately when big news events happen, I'm pretty sure this must have been news. It can take a while to, you know, break through these areas. We're not interested in this long anymore. We're just looking at price to break this low. I think if I was to, you know, you can't really disregard wicks, but if you were to trade internals, you can see that this rejected, pushed down, this order block that got put in got rejected by this wick, which then pushed the market all the way down. So if we're going to get a rejection, I would assume it's probably going to be here, or we take the highs again to our original order block. I don't trade internal structure often, so I just wanted to point out, you know, that's possibly that you can. There's a lot of nice highs here taken. Liquidity, it sort of ticks all the boxes. Just this wick is a bit of like a sort of an outlier, because, you know, if this lows gets hold, we could just keep pushing up. So just the fact that this is in a 4-hour order block after a big rejection going downtrend, it does give it a bit of possibility that this is the area that we're going to reject from and then end up taking the lows. So we'll just mark it out there. We've got the imbalance there as well, so it looks really nice. It's just this wick low that throws it all off a little bit, because it's a huge liquidity sweep. Okay, we're on to the next day. So we're still in this range. Asia session didn't really do much. It sort of held the low and started pushing up, but we're not trading internal structures. This is what we expect price to probably reject from. So potentially if we do reject from this and we get a like 15-minute chock out of it, I would consider trading that, just because it gives me sort of a confirmation that this is the area that we're rejecting from, even without breaking this low. So it's sort of just like weakness in an area that I'm interested on. So let's just play it out and see what happens. Okay, we've tagged into that area. Let me pause it for a second there. Okay, we've tagged in here. What I would be looking for in terms of my weakness is a nice body break below this level. Okay, still catching up. Sorry, it's a bit. So yeah, what I was saying as it was catching up is a body break below this level. It's like a chalk line, which we did actually get here on this candle. I'd have to have a think. This is not a bad, let me mark it out. Not a bad little flip zone. See how it's wick there? How I sort of take mine. Some people would call this a wick chock, but I would wait till this low. So then there was a wick, and then there was another wick break. So I sort of moved down my level until we get a body break. So this is the body break. So essentially, in terms of the order blocks I like, this would be almost a flip zone. You can see, I'll zoom in a bit better. Okay, we're a bit delayed. It's already tagged in. However, if I got on the 5 minutes, I usually use the 5 minutes when we have single candles like this. And generally single candles I only take a flip zone candles because when you have really impulsive markets, it's usually like sometimes the only area you can get in. And so when we look on the 5 minutes, we had a pullback here with a really nice sweep here of all this liquidity. All these highs got swept. Okay, so all these stop loss were taken out. And then huge amounts of volume came in here to push us down. So I would be happy. This is a really nice single candle flip zone for me. I would mark it up, have a look, 3.9, so it'll be 4.4. It's under 5, so it would actually enter on the edge. I'm still playing around with that. Sometimes I like to get a bit deeper, enter on the 25, especially if there's some balance there. But we'll leave it for now with the rules that I have. This is essentially, we'll be targeting the 4-hour low, the 15-minute low, I mean. So it's this range been going on for so long, it feels like a 4-hour low. I guess theoretically we could be a bit more conservative considering we have this untapped demand here that provided quite a lot of impulse. So I think what I would do in live trading would assess the price at this point, the time of day, and just a few other factors, whether I just closed out here or let it run those extra few hours. Would have been tagged in. It seems pretty quick, but we would have had time to set this up. Unfortunately, it just played through, so we didn't get to do it in live time, but I explained it anyway so you can understand. And then we just let this play out. I guess the other alternate, if this was to fail, would be, this is a reasonably good order block up here. Just it's sort of the extreme. We had this big wick up and then we pushed down. This one sort of mitigated it. Some people were asking me, I want to explain, you know, I sometimes use the candle up or I just use this candle. I'm sort of looking at where the impulse came from or the wick high. You know, so if this front candle has a wick high and it's like covering most of this order block, I'll just cover this. If you know the order block is like this huge white candle, then I'll include the white candle and not just the black candle. Whatever sort of, you know, is the major area for the order block. I'll do like a specific video on that topic and go through it in a bit more detail for you guys as well. But I always like to include the wick. I like to see where the impulse came from, you know, so you can kind of see, especially with this one on the 5 minutes, there was no impulse until this candle, and so I want to include this whole sort of area there and go from that. So let's just see how this plays out. We could have got a really deep entry here, but we really stick to the rules. So let's pause for a moment. We had this pullback. Okay, so it looks like, oh yeah, I forgot about this low here actually. Maybe that's probably what we should have been targeting. Wonder if it would have been enough for a trade. 4.3. Oh well, we'll just take this as a loss. It would be a break even actually. but we'll just see how this plays out. Yeah, I forgot about this wick low. So we've swept that wick low, which is fair play. We've then pushed up in New York. You know, this would still be the area that we'd look to short from here. I'm not sure if we're going to get an opportunity to do that, but let's just see how it plays out. Okay, that's super unfortunate there. We would have break even on this one. If we had just been conservative and target this low, we could have locked in 4 hour. However, yeah, that was on me. Forgot about this wick low, thinking, yeah, we'll probably get some reaction once it's swept. I was just more focused on the range as a whole. All good. There wasn't really any opportunities to get in here, and it's now 7 p.m. so we'll move on to the next day, but I'll mark these all out at the end. Okay, we're on to a new day. Overnight, the low was broken with a body break, so that would be a new 15-minute breaker structure. We did actually get a little bit of reaction out of here. Potentially was a potential for a trade here once we had an internal breaker structure here. So it's sort of like we had chalk, and then we had our order flow come down, and again with this what we call the flip zone, the single candle consolidation. It's not as, it doesn't look as good as the one in London, but we can have a quick, we'll analyze it quickly on the 5 minutes. It's not something I would trade, but just to give you as many examples as possible, because I think it's the best way to learn. Doesn't look, from first glance, if I can pull them, from first glance it doesn't look as good. However, we did have that pullback. We got a nice little sweep here, and then a good amount of volume came in, so it'd be interesting. It would be you know, a bit more of a risky one, but obviously you can see it played out. I wonder if we would have got tagged. Now you would have been tagged in at 8:30, so not that late, and potentially anyone's in the US could have probably traded it, or we probably would have been crazy whether we got filled or not. But that's like such a snipe move, and then you would have had the same target as breaking the low. Actually would have been a pretty nice trade. You would have played out for 5R before the session ended, so not too bad. Definitely a possibility. That's like, it's definitely with these single candle consolidations, if they're just led to the breaker structure, it's something I like to look at and look on the 5 minutes to see if it does fit the criteria there, because sometimes on the 15 it doesn't always look as good. So okay, so we reassess here. What I might do, new day, I'll jump out on the 4 hour now that we've broken some lows and see what we've got on offer here. Okay, so we had a 4 hour breaker structure. It's kind of, look at how the fractal nature. We had the single candle consolidation right before the breaker structure. We looked inside on the 15 minute, it looked good. Unfortunately, we didn't get tagged. Would have been a beautiful trade, but you know, it's the same thing we looked on the 15. So the market is quite fractal in that sense. We're just working our way down. You know, we have the same setup on the 15, we jump on the 5 to confirm. We have the same 4 hour, we jump on the 15 to confirm it. And so just working down with the different time frames. I found those ones work the best together from my back testing. But yeah, very unfortunate. This would have been a 18-hour trade if we had been tagged in, but yeah, didn't come to our order block. So what do we have now? It looks like we actually overnight had a new 4 hour breaker structure. So then now we would actually have a new 4 hour high. Let me pull this because it's all been mitigated. This would be our high. You know, with my order blocks, I'm more lenient with the 4 hours in terms of the mitigation rule, but that seems like pretty mitigated. So probably move it to this one for now, but be aware that we could sweep these highs again before we come down. But it's just the area that I'm looking at in particular. Mark this out. This wick also, you know, could almost be classed as mitigation. But we're just sort of looking at the whole area as a whole. So anywhere in this, the wick is covered as well. We would be looking for sort of reactions out of. Especially, let me draw up our premium and discount. It's a really good way to tell as well. Doesn't always come into it, like you saw here. So that's why I mark up all of them. But it's a good rule of thumb. Still have this old point of interest. Guess we still have this one. However, all the imbalances kind of be filled. This is sort of the one That actually looks really good here. We had a few sweeps, and then we still have imbalance below it. We also have this one here as well. It's kind of like that flip zone we talked of. Well, it led to this 15 breaker structure and the 4-hour breaker structure. I think it's also valid. The only thing it's in the discount zone, so it's a little bit less probability, but we'll mark them both up. Marked up those both. Pretty much we're not sure if this is the low yet, hasn't been fully confirmed. But let's draw it up. Let's have a look where we are actually. Okay, so we're below, we've mitigated the 4-hour point of interest that we had marked up before, but we are still in this daily area. So just to be aware of, if there are long opportunities, we will look for longs out of sort of chocks, as long as they come in before we get into our supply zones that we're looking to short from. So I'll move it a bit across, we don't need to, we just know that it's there. Alright, so let's have a look. I'm looking to short, let me just mark them up. The only thing that sort of puts me off this one is that we've got the slanted highs. So one, there's still leftover liquidity on both of these wicks. However, yeah, that's just what brings it a bit lower probability. So, but let's see if there's I'll just copy this across. The more I look at this one, the less I like it. Let me see on the 5 minutes. I remember there was still imbalance. Tiny bit of imbalance above. Let's just leave it on for the sake of it. But this would be a low probability setup. This one's higher probability. It could be worse. You'd go break even quite quickly on this one potentially. I don't really have a rule for it. Normally, I just wouldn't take it, but we'll just leave it like that and see how it plays out. See if there's any longs going into it that would reduce the risk. Moved up quite impulsively. We had this minor shock here, this area. It is valid for longs. I will set it up. However, it's only going to look into the supply areas to start with. Alright, we've been tagged in. I thought we were going to get smashed through it. Okay, let's pause it there. Oh, okay. We've been tagged into this one. It can be the benefit to look for these minor chocks. The reason I wasn't that keen on the last one, what I explained, is we had already pushed up into the discount zone before we came back. This one, we had just a minor push up. So this one was still valid and high probability. And I actually took this trade, now I think about it, in live trading. It does look familiar. But let me just mark it up properly here. 4.9, is that true? Okay, so we'd enter on the edge. So first, sort of what we do with the counter trend trades. Okay, so first is the break of the high, and then if you want to let it run, you can look at supply, the next supply area that you're looking to short from. If you are taking a short from here, then you could potentially let this run to see what plays out and just have your stop loss below here. So if your short starts playing out, then you get stopped out of your long, and then you play with your short and you still make profit that way. And if that keeps playing out, the next area is the premium discount zone for me. So it looks like this one's taken a loss. We've swept it. This has made it to our second take profit at 6.57, and I wonder if we'll make it to the third with this next order placed here. I did talk about this one being lower probability due to the fact of having a slight amount of imbalance above, and let's pause that for a second. So this would have hit full take profit, even if you put it to the next supply zone, but we'll leave it at the highest profit here of 8.8 because that's the highest probability. Once we hit this level, obviously we've got short setups here. So let's have a look here. Wonder if we would have got tagged. That'd be quite annoying if we didn't. Let me have a look. How big is this order block? 8.7, yeah, so we'd be targeting the 45. Maybe on your broker, but not on TradingView. That sucks. Oh, so close. I'll be reviewing it on the 2 minute as well to see if that would have, got tagged. Because sometimes the 2 minute, it's like dependent on the candles. But I do that at M when I'm marking it up. So let me just clean up this a bit. So, So this we got 8R. We had a loss here and a miss. We're expecting this low to be broken. Okay, so let's play it out and watch. Okay, hold on a second. We do have this nice sweep here. Let me have a look. We pushed up, pushed down. Like I said, we should look at weakness out of inside of weakness. I don't think this would be too late. I wouldn't be trading it but people are trading the New York session. We had the push up, then we had a confirmed like bearish chock inside our bearish leg down out of our bearish point of interest. So we've got like, it's almost like a confirmation trade. Let me just mark it up. And then we've also got our, like I said, this is our flip zone, our single candle flip zone. You know, you can include the white candle up if you want. You can also, with these single candles, we want to include the wick high, because that's quite important. You can have a look and see how it moved, but I think we just would include the entire area, because that was the white candle, or even at least the body of the 15-minute candle up, because this was the entire move up and then push down. So could have a look, see how it goes. I wonder at what point we would have got tagged in, but yeah, it's already 7.6, so we would have had to go on the, or maybe if you took the whole area on the 45, you might have got tagged in there. This is just for like research purposes. I won't include this in data because it's not something I would be taking, because it's a bit late. 6:15. I would have to be working late. Most of the time I'm cooking dinner at that point, so I probably wouldn't take it, but it's potential for the New York session people. It did play out pretty perfectly there. So yeah, that's why it pays to sometimes include the whole up area in that case. And you know, 3.86, not the biggest target, but if you're at the end of the day, you wouldn't be upset about that. So we've now broken the low again. We're pretty much at the end of the day, so I'll skip through to the morning, and then we can look at Friday, the last day of the week. Okay, we're on Friday, last day of the week. I'm going to jump out of the 4-hour time frame just to see where we are currently. I think you can just do that. No, H4. Okay, you can see a lot of back testing with this whole month. Gets quite intricate here. Obviously, I'm not deleting anything. Normally, my charts are a little bit cleaner than this. However, we didn't get a break of the low. So I had a little liquidity sweep, I guess you could say. It's 4 hours. I'm thinking we're gonna sweep some highs, take some liquidity. It's a 4-hour high, 4-hour low, because we've got some wick highs here, wick highs here, wick highs, wick highs. It could be a little bit of a cleanup day. So getting in longs could be pretty handy, but we will look for weakness. You know, if we sweep these highs, look for 15-minute chock, but I don't have anything else particular that I'm super looking at right now on the 4-hour. So let's jump back to the 15. We did get a break of structure on the 15, but a liquidity grab on the 4-hour. So I have to this would be the 15 high right here. In terms of the strategy, we trade the 15 until it breaks, and then once we get 15-minute high breaking, then we look for, you know, maybe higher up, get rejections, and then, you know, if the 4-hour then breaks, then we look for longs, and it sort of moves up like that fractally. So if we're going to look at this stream, we had the wick up, we had this one, and then this was the last one that mitigated it. It's got some imbalance below, some wicks here to take. So this is sort of the last area on the 15 that we could take shorts out of until price might move up into higher areas where we need to look for a 15-minute chock again, bearish to go short. Let's mark it up, 13, pretty big point of interest, so we'd go for that. The reason I'm happy to take this one even though it doesn't look like it swept a lot of liquidity. It was because the last ones did and the second last one, and it's sort of what's mitigated here. If it hadn't mitigated a decent order block, then I wouldn't be taking it. But because these are really good order blocks and push down super hard to break structure, then we just follow our 15-minute trend, and 6R, it's not bad. Let's see how it plays out. Right now, okay, so I just want to clarify that. Because we're in this 15-minute downtrend here, I'm not looking for longs because, like I said before, we've already pushed into the discount area. So longs would just be, until we break this high, potentially I'll look for longs from there. But while we've in this bearish move down and we're in the discount zone on the 15, I'll just leave it there. I'm not going to look for longs, they're too low a probability. So looks like we've just rejected from this same area and we're moving down again. Still interested in here, but maybe it's going to take the low before it gets there. Let's have a look if we missed anything. Push up, push down, push up. This low got swept. These lows got swept. I guess the only sort of trade there might have been was this chalk, but when did it all occur? And then this break of structure here. I didn't really analyze that because we had been in the discount zone. And then we had this flip zone here that then we rejected from. Let me mark that out. So we went into the discount zone as we marked up on the 15. We then proceeded to have a chalk, a break of structure, confirming the bearish order flow, a nice OB here that swept liquidity. So it's like that order flow. We have the low that put in a chalk and then we break that low again, confirming bearish order flow. We've then since, I guess you could say, broken it again. That's potential for a next trade out of here. However, we've now swept a lot of liquidity from below. Let's mark it. What did it put in? 850. It's following bearish order flow. I'm going to mark this up as a missed trade. Would have been pretty amazing RR. I'll mark it up later. Anyway, we probably would have been conservative like last time. Got a nice sort of demand area here. Okay, we've tapped into that. That led to like a sort of little mini chalk here. What to do? I'll take this short because it's valid, but I have a feeling tapped into demand, had a pretty good reaction out of it. We could end up, I'll leave this on as well. So 6.5, go to the 25, take out the low. 5R, it's not bad. Let's see. So we never got a chance to get in, unfortunately. Let me have a look what this one really nice would have been. I'm pretty annoyed we missed that. I'm going to mark it up anyway. Sometimes when you have an idea, you sort of get stuck in that idea, where I was with this order block up here and not realize that we've retraced into the discount zone already. We're also in an old point of interest that's rejected us before, and it got almost mitigated fully, but it's quite a big area, so it can, it was only to the 45. Usually 50 plus I consider them fully mitigated, so fair enough. It's then had rejection again with a chalk and then bearish order flow, so another breaker structure confirmed there. Let me just jump on the bottom of this, and then targeting a low 10R, so pretty costly miss. However, yeah, it does happen sometimes if you've got an idea in your mind and it doesn't play out. So let's have a look now. We've broken the low. Let me bring the 4-hour low across. I'm not sure if it's a confirmed break on the 4-hour, but definitely on the 15. But like the same thing I said again, this is just an area that we'd be cautious about. We're not going to take trades out of once we've retraced to the discount zone on our leg. It just becomes very low probability. It can play out, but we just use it as more as targets just in case it does react than actual place for entry. So here we've now broken the low with the 15. Very bearish trend all of August. That's the new 15 high. Let's do the same thing again with the premium and discount now. Let's move it across so it's not covering so much. Let's have a look. What were we looking at before? In this This is still valid for us now. We've broken the low. Really nice order block that swept liquidity. Still got imbalance there below. Led to a breaker structure. Eventually a breaker structure down here. I really like that, so we'll leave that. We have also got this, what do we call the flip zone. However, let me have a look on the 5 minutes, see if it looks. Not a big fan of this one in particular. It could still hold, but we have like this wick high that's got imbalance there. I don't really like this order block because there's lots of wicks here that could be run. So this is really the only one I'm sort of looking at in the discount area. So let's see if it comes in. It's Friday after all, so not sure if we'll get much going on Friday afternoon, but okay, we're moving up. Not yet tagged. Okay, yeah, we wouldn't be leaving it on anyway. It's now in the night time, coming into Friday, coming into the weekend. Session's about to close, so potentially it could be still an opportunity for next week. However, we'll reassess on that after that. But yeah, what I'll do now is I'll tally up the results from this week, and then I'll go over them with you guys and see how we did. Hey guys, got all the results tallied together. Actually an epic week. So, you know, so much for summertime sadness. If you can trade the charts right, the opportunities are there. I'm really tempted to bring back this M2 OB entry. I got heaps of backtest data on it. I really love it. I backtest for ages on Euro USD. If you check some of my early videos, you can show it. It's just pretty much the inside the 15 minute, I refine it to the 2 minute order block that's valid in there. You know, that's unmitigated. You know, like usually the last up candle in bearish or the last down candle in bullish, that's been unmitigated. So let's just start with this one over here where we ended up break even. If we had a look conservative and just realize that we had this wick low here, potentially could add a 4R from the normal entry or 8R with the M2. So we definitely would have looked pretty conservative here. But unfortunately, we took a break even on there. It happens. We're a bit ambitious. And I forgot about this wick low. Here we had, it's later in the day, we had this single candle flip zone that we looked at on the 5 minutes that looked really nice. You can see the small box in there. That's my 2 minute refinement. I'll run through it. I'll do a video on refining to the 2 minute as well specifically, but I'm just trying to gather data on it now. We would have missed the 2 minute refinement. It was a bit too sniper, but we got 4R, or just over 5, just towards 5R for this in a late day trade. Next one we had got a nice chock here with a good order block here that had swept the lows with imbalance, led to chock. We've come back to it straight away without retracing into our discount zone yet, so very valid for longs. Depending on like obviously your risk appetite, highest probability here would have been from the 2, if you're entering on the 2R, that's like a 10R. Then to the supply, if we're going to take this short, then we ride out to see if that plays out, and then all the way to our premium and discount. You know, even if it's really moving hard and you go up to here, but I think the premium and discount is really a nice area to aim for. So 18R with the M2 or 8R with the regular entries. We took a loss on this supply zone here. Actually, when refined to the M2, because we've got like some mitigated order blocks here and the last M2, you can see that swept in here. I can show you on the lower time frame. This actually would have been tagged in on the, that's why I don't jump to the M2, because otherwise these videos will take forever. But I'm gathering the data and I'll show you how I refine quickly on this video. Pretty much how I refine my order blocks no matter what. So really nice order block here on the 15. I still cover the highs just in case of a sweep on my stop loss, but you can see here we had the main order block, this last up candle on the 2 minutes that swept liquidity. We then had the next candle has, you know, pushed up and taken more than 50%. Let me zoom in even further so you can see. Okay, so that's super clear. We then had this next candle push up, mitigate this candle. So then it moves on to this candle here, but then we had this wick high come up and mitigate fully this candle and almost sweep the highs. So then it moves on to this candle. We have a slight mitigation on here, but not enough for it to be fully mitigated. So this is where we keep our 2R here. at M2 OB. And so then you go across, I'll jump back out to the 15, but that's where I drew it across. Okay, that's where I pulled it across. You can see it there. I'm still going to cover the highs just in case of a sweep or anything like that, or we get equal highs or something like that, because I know I'm more trusting in the 15 than the 2. But for the entry criteria, that would have got us in when the other one would have missed. So pretty interesting on the refinement. It's usually the other way around. Here on the next one, on our flip zone, we wouldn't have got filled on the M2. Much too sniper there. We just barely got filled on the regular one for a 4R. Here was pretty much our missed trade, but still very valid following order flow out at the discount zone. We got a chock, a breaker structure, very nice sweep, refined to the 2R, 18R. Pretty epic entry there. And then, yeah, we never got filled there. So, yeah, really awesome week. Really good to see that the opportunities are huge. 46R in a week in the middle of summer with this 2-minute OB entries. It's definitely something I've been testing and bringing back actually into my live trade. And if you're in my Telegram group, you'll see some of my markups now include the M2. I'm not recommending it fully 100%. I haven't bought enough data, but you're going to see that the opportunities are there and it's worth forward testing yourself. You might miss a couple, and if you're happy to do that, but then you pick up these huge winners, I'm very happy to do that, and I'm happy to roll with it if I miss it. It's not the end of the world. I'd rather the ones I get in and the good setups I get in really make the most out of that setup and capitalize on it as much as possible. So if you like what you see here, I'm going to be producing more learning videos as well, so we can dive into market structure, dive into how I select my order blocks, dive into even look at my videos I currently have of how I select my order blocks and my confluences as well. Check on my back testing and how I see the market, and join my Telegram group, subscribe, like, share this to you guys, so we can grow profitable and consistent traders together. Stick around, part 4 still to come. Thanks for watching, and stick around for the next one.